May profits be upon you. How you guys doing? Welcome back to another weekly Forex forecast. Okay. We're going to start out with the Dixie because the US dollar is weighed against a basket of other currencies. And this gives the best reflection of US dollar strength and weakness, right? And we know that this is the key, the key currency to a lot of the pairs, particularly the majors, right? So we want to make sure we understand where it might be going, how weak or how strong it might be. All right, let's do a top down from the monthly. All right, what's the first thing I look for? Where's the break of structure? Because the break of structure shows us the break of market structure, I should say, shows us what the bias might be for this this market. And on the monthly time frame, the break of structure is to the upside here, right? And that lets me know that price has shifted from a bearish to a bullish bias, or bearish to bullish momentum. Okay. Even though we may be lower than this high here, right? We didn't break this low. So you have to make note of these kind of things. If we didn't break that low, all right, if this high didn't create a new low, that makes this high vulnerable. All right. Whenever a high doesn't make a new low, it didn't do its job. That means it's a target for liquidity. So bear that in mind. All right, keep that in your head, because that principle runs throughout all the time frames, because we understand that the market is fractal, right? And what is structure on the higher time frames is structure on the lower time frames, I assure you. Okay, so we are bullish on the monthly, right? And we understand that we are running into some supply here, all right? And what we can see is that this month is already starting off very, very bearish, very bearish. We're not even a week into the doggone month, and we're starting off bearish, all right, with this body engulfing the previous body, the candle body, right? Let's take a look at the weekly, and where is our break of structure on the weekly? Can you see it? The break of structure is to the upside here. Yeah, right here in the supply. I have this supply marked here, weekly supply, okay? Got it marked there, and you see how price responded to it very, very aggressively. As aggressive as it came up into supply, that's how it left, right? And again, this body engulfed the previous candle body. So does that mean things are going to be bearish from this point on? It's a bearish pattern, but we need to see the follow through. All right. So don't get too crazy on it just yet, you know, start making sells and stuff. No, because the US dollar has been strong, man, strong, and we broke structure to the upside. All right. Doesn't mean we're going to start going down, right? So let's take a look and see what's on the daily. All right. And where is our break of structure? Right here to the downside. Right now, I hope that doesn't confuse you. What you want to find out is what you want to look for when you're correlating time frames is, what is the higher time frame trying to do? Is it trying to make a higher high or a higher low, or a lower low, or a lower low, or a lower high, right? You want to know what is that target. On the monthly, you know, we didn't make, we thought we was going to be making a lower low. No. All right. It didn't break that low. So we're coming back up. Is this going to be the lower high that breaks this low? because it didn't make a new high. So this is vulnerable, right? We could be coming down, which would mean a weak USD, right? So it's kind of hard to say because we're in the middle of this range. Very hard to say, but it looks, we are bullish. That's why we always check the bias. What do we expect? What do we expect? A higher low on this time frame. I'm expecting a higher low to be made and then a higher high. Could that higher low be made here? You know, I don't know. I don't know. Could we come back down to here? I don't know. We're going to see how what the indications are on the weekly. This could be the establishment of the higher low. Maybe we can come up from here, from this daily what do you call it? Daily demand zone here. All right. Maybe that could be because we broke this high after this pullback. So this is a strong high. That's why I want you to keep those things in mind. This is a strong low, excuse me, because we broke these highs. So when you have a strong high, it becomes tradable if price comes back to it. You just expect price to hold, price to be held by this demand zone. Do you understand? So I'm expecting price to go up higher. Okay, and this could be the establishment of that higher low. On this time frame, it is. Just think higher high, higher low, higher high, higher low, higher high, higher low, higher high. I'm looking for this higher low here. Now you're tracking. Now, what does that mean again? This is a weak high because it didn't make, excuse me, it didn't make a new lower low. Not yet anyway. It could still do it. But if it holds here, that means this becomes vulnerable for liquidity. All right, and price would come up higher. But I am expecting price to travel higher from here. We have an imbalance, all right, a fair value gap to fill, and price could come up and do so. Price, that's a draw to price, all right, to fill in those imbalances. Okay, it's an inefficient price move, which leaves an imbalance, and price will always fill those imbalances, comes back and fills them in. Okay, so doesn't have to do it when you think it's going to happen. It could come back way later and come and do it. You know, the price could definitely start coming down. All right, but I don't, that's not my first expectation. I think that we're going to fill this in first, and we'll see how price reacts once it gets here. But I do believe if we see that upward travel and we break that high, we're going to break this high, because that's a weak high because it didn't make a new low. That's what I'm looking for. All right. On the if we go down to the 1 hour, we can already see the signs. Sorry, we can already see the signs that price is turned around here. This is what you want to see: a low made, a pullback, a lower low, another pullback that breaks that swing high, and then price coming back into this leg of structure to find the origin, which would be down here, this part, or just a strong enough order block that'll keep price going up. And this some people call this a quasi. Some people might call it a inverted quasi. Some people might call it a head and shoulders or whatever, but it is a reversal pattern. And you can see that happen here. Boom, 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 boom. Broke that high. Came back into it. Here we go. Okay. So I'm looking for bullishness. I'm looking for strength in the USD. Let's go to Euro USD. Okay. We're going down to let's check out the weekly first. All right. I can't believe I keep doing that. All right. How does this market look to you? All right. We didn't break this high. Just like this is the inverse of the Dixie now. So we didn't break this high. Where's the break of market structure? Did I mark these out here? 1 second. Did I mark them out? No. Okay, good. All right. So what are we looking at? We have break of structure to the downside here, down, right? And lower high, lower low, pull back, lower high, lower low, pull back, lower high, lower low. We break that structure here, right? Break that swing low there. We are in this demand zone here, but we broke it, closing below it here. All right. That's something to remark about, because if we're breaking demand, like we broke these demands here, you know that the order flow is bearish beyond any shadow of a doubt, right? So we have a pullback, a big pullback, and it formed an engulfment. This week was very bullish. All right, this past week was very bullish. All right, what do we expect now, though? All right, let's take a look on the daily. We got a little trend line going here. That price seems to be holding under, all right, until we got here to a couple of days ago. This past week has been a very bullish week for the euro against the dollar, right? All right, and we closed here at this 4-hour supply. So what are we expecting here? What happened here? Price came up, took these highs out, all right, took the liquidity. Because we took that liquidity, I'm expecting some kind of retracement now. And it might not just be a retracement. It might be price just taking the USD strength coming in and taking it down, jack. All right, let's see. Let's go to the 4-hour. And what do we have? We have this supply here. I'm sorry for all the shifting. All right, we have the supply here. It was refined from this point. This is an order block where the buys, where it was a buy to sell move by the market makers, right? A buy to sell move. They have to come back and get out of these buys, because as it comes down here in the profit with their sells, they are in drawdown from those buys. And here we come to mitigate out of them. Boom, right? I love the way the market works. It can be very clear if you understand smart money concepts. We're trying to follow in the footsteps of smart money, right? So what do we have here? We have price reacting to the 4-hour supply, all right? And I'm expecting, you see all this inefficient price movement. It's just one-sided, all buys, right? Price wants to come back and balance that out, because it always does. See here, it came back, balanced it out. It always does. Doesn't have to do it the time you think it's going to do it, but it will do it. All right. So what we would need to see is, are we shifting from bullish momentum to bearish momentum? It's the same setup, same thing I look for every time. You see it here. High, high made, pull back, higher made, pull back. We did not go higher. We break that low. We come back in to the break here. The price just drops. That is a change of character. That is on the 4-hour. When I have a pullback that's like 40 pips at least, that counts as a full grown pullback for me. It's got to look like 2 candles, you know, at least 2 candles, consecutive candles that trade outside of the range of the previous candle. Okay, so that's what you want to see here. And you can see it here. Pull up, pull back, up, down, breaks that low, comes back into it. We should be expecting some further bearish price action. That's why I got that arrow there. Okay, if we go down and take a peek at the 1-hour, we can see that it was very clear. All right, got this high, comes up, come up, pull back, This is where we have a change of character, but this is where we actually break some what I would consider something substantial as far as market structure. When we're talking about market structure, we're talking about microstructure or actual the main structure. All right. Microstructure is like short-term highs and lows. That's just short-term. That's just short-term. But we have two breaks. We have two breaks of these short-term lows. What if two breaks of short-term low? You're going to expect a return to impulse. And that's exactly what happened here. And we're looking for further downside. Okay. Two breaks of short-term lows is like a break of market structure, a break of actual market structure on that time frame. We have inefficiency here, an inefficient price move here going into this order block here. That's a draw for price. So I'm looking for price to come down here. I'm looking for price to come down here. And I think it would be a nice short from this area. All right, we're going to go to the next one. Pound USD. All right, pound USD. Take a look, take a peek at the week. Excuse me. A peek at the weekly. You can see that we've just been making lower lows, lower highs, lower lows, lower highs, lower low. And here we are, right? So I am definitely bearish in this market. Come on, man. This thing driving me crazy. All right, so the last break of market structure to the downside. I should draw that. We have a break. Wow. We have a break of market structure to the downside here. We have a return to impulse and price starting to move down. That's the way you want to see it every time. And as price is chopping its way down, what are we expecting? We're expecting this lower high to make a lower low. Breaking that low, breaking those lows. We're looking at the liquidity as a target here. Why would we be looking at that liquidity as a target? Because this is a weak low. Why? Because it didn't break that high. If it didn't do its job, it becomes a liquidity target. Remember, I'm going to repeat it so that you learn it. I hope you appreciate that because I did as I was coming. All right, so we got lower lows, lower highs, lower low, right? This isn't a lower low. We're aiming towards the liquidity down here, right? So we're working our way down. This is, I'm expecting this to be a low that holds, all right? I'm expecting the daily supply to hold. You see how this day, how last week, Friday, it closed very bearishly. It closed engulfing the previous candle. I'm looking for price to continue with that bearish pattern to give it some follow through, right? And again, you can see the same pattern. Higher, swing, pull back, higher high, break a market structure. Price goes up in here, and then we can expect further downside. Because that's the way the market works. Now, we need to take a good look at this. This is why I'm bearish on that time frame. But we need to take a good look and see that we have imbalances here. Imbalances here. Why are those imbalances so important? Because price likes to fill those imbalances, those inefficient price moves. That you can call them inefficiencies, you can call them a fair value gap, but price likes to close those things. And you can see, maybe it's clearer. Yeah, on the 8 hour, you can see it's just one big inefficient price movement. Okay, from here to here. All right, from the end of this wick to the end of this wick with the candle in between. Okay, that's the way you measure it. And price will likely at some point fill this in. All right, we're on our way to doing it now, but price likes to go back above that break of structure into those inefficiencies, and you can see if price is going to start doing its thing. All right, and the way you would see it here is on the smaller time frames, like the 15-minute. And you start to see if price is transitioning. Did we go high, pullback, higher high, pullback? Oh, we didn't break that high. Look for these lows. That's a short-term low. This is a market. This is market structure. All right. And when we see a break of it, when we see a break of those lows coming for that liquidity, for sure, it starts to give us a confirmation. It gives us a confirmation. This is done. You know, this is a nice pullback. I would like to see this one broken for market structure. You know, as far as market structure is concerned. And we're doing it right at the inefficiency. So I'm definitely on this one. And what do we expect? We expect maybe price pulls up into this, further into this inefficiency, and maybe take out the liquidity at these tops, take out this buy side liquidity and come back in here, and maybe we can go further down. All right. This is our trading range. And it's I put you put your fibs on here and you look at the 50% mark. That's where you find equilibrium, right? Right here. Okay. And we've come up into this the premium section. This is a discount, this is premium, you know, looking at the numbers, higher numbers, lower numbers. All right. But what you want is for price to pull back into this area, at least 618 as far as my measurement is concerned. I want to see price come up in there, and that's where I would take my shorts in this area. All right. And I don't know if price is going to break that high. I don't know. If it does, I'll be waiting for an area to take a short. Price could come up here, take out these equal highs up here. Okay, there's equal highs up here. Price could come all the way up here, you know, and tap this inefficiency up here, this imbalance up here, and then come down. That's a tall ask. All right. You just want to remain flexible. You don't want to stay married to your bias. But what I'm looking for is, you know, a bit of a pullback. And that's what price is doing now. That's what it did. That's how it closed on Friday. If it comes back up in here, I'm looking for a price to continue down, because this looks like impulse correction, even though it came down this way already. If it comes back up, if it doesn't come all the way back up there, that's fine. That's fine with me. You know, just look through your time frames and know that we've already gone past the 618, the 50% mark. And you see the exhaustion here, right? So, you know, we have a bearish engulfer here on the 1 hour. That's a good thing, because the first thing I'm going to look for is price to come back like this candle did right here, and look for a price to come on down. Now we got a second candle showing rejection from the bottom side. So I'm looking for a price to either be held here by supply, on the 1 hour, and then, you know, come on down after it takes out this liquidity here at that at the wick high. You know, I want to see this take that wick out, and then I'm looking for signs that price may come on down. I'm going to be looking on the 15-minute for this. I'm going to short this market. I'm going to short this market. We have a break of structure to the downside, so I'm not looking for buys. I would not recommend buying in this market, not with a break of structure to the downside. Does that make sense? All right. So price could come back up here, test that the base candle of that order, that bearish engulfer, and come on down. All right. It could also pass this and want to fill in that efficiency up here, and there is another order block. It could come up higher and then come down. We just have to see. All right, we just have to see, but be flexible. All right, I'm looking for that. I'm looking for price to either break these highs and then come up here and come on down, because this doesn't look like it was mitigated. So I'm going to keep my eye on this one. I'm going to keep my eye on this one. Let's see. Boom, boom. Yeah. All right. I'm going to keep, this is what I'm going to look for first, like I had described a little while ago, and we'll see what happens. All right. Next pair. Let's go to USDCAD. All right. We're going down to we're going to take a peek at the week. All right. What do we got here? Price came down. We see this lovely recovery here. And we've been with the higher high, higher low. And we haven't made a higher high yet. But it looks like we are on our way to doing so. Did we break that high? Hold on a second. I think technically we did. I think technically we did break that high. Yep. Come on, man. What is that about? Yeah, we did break this high. We have a breakup. We took the liquidity from that top. All right. And from there, price starts come on down. Actually, yeah. I think we took this one out too. Yeah. We took out the equal highs. Sure did. Look at that. Doggone. Price was not joking around over here. So it took out the equal highs, which is a magnet for price. As price started coming down, because you know that there was a lot of stop orders up there for people who were taking shorts. Took them out. Boom. Right? Took them right out. So do I have any notes on this one? No, apparently not. Okay. So where's the break of market structure? Can you see it? All right. Price pulls up, pulls back here for a good bit, pulls up, and then we break that low. All right. We actually made a higher high here, and we broke that low. All right. So this, in effect, becomes the higher low. And we got a nice little trend line going on here, don't we? All right. So let's go to the daily. Get rid of this. You know, I don't like a whole lot of mess on my screen. All right. Okay. What do we have here? Let's take a closer look at this price action. Price comes into this supply. All right. This is a daily supply here. And you see the reaction from the bearish engulfer, came back and testing that bearish engulfer. And we have liquidity with near equal highs up here. That's going to be a magnet to price. What do we expect from the higher time frame? That price will continue bullishly, don't we? Because we made a higher low. What are we expecting? A higher high. A higher high is the higher time frame target for the lower time frames. Do you understand that logic? I hope you do. Hey, if you like those little nuggets, those little tips, leave me a comment. Make sure you hit the like button if you already forgot to do it. Make sure you hit the like button. Don't tell me later on, hey man, I really liked your doggone video or whatever inside the free Telegram. All right, you want to join that as soon as you can for Lions Dennis FX. But I want you to leave the comment in the comment section so that it helps the YouTube algorithm. Okay, let's move on. Let's go to the 4 hour. And we're looking at this price action, man. All right, we've created those near equal highs. We got a bullish price coming. I mean, it came up in there with a lot of aggression, right? But we did not break those highs yet. All right. So what is price doing? With that bullish move, we have inefficiency, right? And price is filling in that inefficiency. We got this far. It was here. It was up here. And then price came down into it there with the bearish candle, and then followed through with the bullish candle. So we still have some to go, right? But where do we expect it to go? Well, this move, this area here is a bullish order block. It is demand, all right? The sells start here, down to here, and that's when the buys start. So they took the buys, they're in the institutions are in profit, market makers took a sell to buy move. We got to get out of these doggone sells. So I'm expecting them to come and mitigate out and then come back and then have it shoot on up. All right. We still have the inefficiency. So that's what you like to see. You want to see an imbalance and an inefficiency on the way right above a POI, a place of interest. You want to see that inefficiency lead into a demand or supply zone. All right, because you know that there's incentive for price to come down and to mitigate out of those orders. Remember, keep that in mind. All right. So what do I expect? I expect price to go up. I expect the US dollar to be strong against the CAD. All right. CAD received some boost from oil, US oil, and started to take price down a bit. Right. But with the rate hikes and all that, the fundamentals that might be in play here in the US, I'm expecting more USD strength. All right. We might see a pullback because after every impulse, there is a pullback. And if we at least get 50% of a pullback on this one, I'm measuring from the start of the move, the start of the impulse to the end of it. And I believe that we may come further into this imbalance, and then we'll have a nice buy to the upside. I hope everybody understands what I just said. I hope it was clear. All right, this is a daily, this is daily supply inside 4-hour supply. All right, we've already gone well past the 50% mark of the daily supply. All right, and we are already at the 50% mark of the 4-hour supply. I'm thinking that the supply zone will not hold. You understand what I'm saying? And with a pullback, a correction, and a new impulse, USDCAD, I believe, will go up. All right, let's go to AUDUSD. All right, AUDUSD, let's start on the, let's take a peek at the weekly, the peak of the week. All right, easy to see, right? Lower low, lower high. Lower low, lower high. I'm looking for that lower low to be made. All right, we already have broken this low. That's on the weekly, easy to see. On the daily, where's that break of structure at? We have price coming down, a full pullback, and we break structure there. We break market structure there. We break market structure there. We actually break structure here. But this, did we get a close, an actual close beyond that? Reason being is because I'm a little technical with structure breaks. We didn't get a close below that structure there. So it's just a liquidity grab. We grabbed the liquidity for people who took longs here. You know, we didn't grab it, market makers did. And you see how price reacted, right? But because of all those structure breaks I just illustrated, you expect a pullback. And where did we pull back to? Supply, of course. And if we just marked it here, all right, we have this is probably a 4-hour supply. Oops, wrong color. All right, and price is moving like we would expect. All right, this is a very bearish candle. All right, and there's inefficiency in that move. Let's go down to the 4-hour, and we can see there's inefficient price movement. We have an imbalance. I would expect price to come back up after finding this demand zone here, a 4-hour demand zone. and this inefficient price move, I figured that price is going to come back up to right around to this area to fill in that fair value gap. All right. And we'll see price continue to the downside. All right. We made the lower high here. All right. We took liquidity from this. Come on, man. My mouse is so. All right. We took liquidity from that high already. All right. And price is coming down. You always think in terms of what is price trying to accomplish. And, that helps you with your story. And your story is what will give you a bias to have in mind. What is price intending to do with that bearish order flow? Well, take out that low, take out the liquidity there, and make a new lower low after just making this lower high. Got it? That's the logic. All right, let's move on to the next one. And what is that? Aussie. There we go. NZDUSD. Okay. Now, what do we have here? Let's go down to the weekly. Let's just take a peek. All right. We can see price broke this high. All right. After a pullback, we broke that high. You're thinking, hey, we're turning bullish. Did we actually close above that high? Technically, let's check a look. I will tell you in a second. No, we didn't. No close. That means what? What did I just tell you a minute ago? A liquidity grab. All right. You're seeing price from that high, swing back, make a lower high, lower low, lower high. Oh, excuse me. Lower, lower, boom, here, boom. You're thinking that, hey man, we just made a higher high. We're going bullish, right? And you would be right. Price did go higher. At this point, the bias is turning from bearish to bullish. All right, the momentum has shifted, and we made a higher low, right? So you're thinking a higher high. Well, not quite. Took that liquidity and then broke that swing low, and we broke structure also. So the bearish momentum is confirmed with that break of market structure. Hope you were able to follow that. I stumbled my way through it. I apologize. Let's go to the daily. What do we got here? We're going to take a closer look at this price action, right? We see how the impulse came and we had this corrective structure here, right? With the pullback, making a lower high, all right? Then we break structure here. Very important. That means we're bearish, right? Come down, we find this daily demand here, and we have a nice reaction. Why did we have this reaction here? What happened? Well, let's take a closer look at it. Let's take a closer look at that price action here. We had a chalk here, a change of character. That's the earliest sign that price is going to shift, all right, from bearish to bullish momentum. All right, chalk. All right, we have a chalk here. All right, price pulled back into the break, and we took off. This is nothing but a micro structure break of structure. Okay, this is a break of microstructure, and we pulled back, and you could have taken an aggressive. Chalks are aggressive. All right, it is aggressive, and you could have taken along here. All right, we have another short-term high, short-term high. Two short-term high means we're going to see a pullback and a possible return to impulse, and that's exactly what happened. This low became inducement for people. It's a trap where they get people to take buys early with this pullback. They give them in the profit, then come back for that stop loss. All right, because we're supposed to be waiting here And that's exactly where it comes to. All right. The return to impulse, the return to the origin, all right, of this, the impulse that broke the structures. Got it? Okay. So price responded bullishly here. We have inefficient price movement here. What do we expect from NZDUSD? All right, we have a bearish break of structure here. Maybe a pullback into the inefficiency should follow, right? And then down, further down. That's it. It's that simple. Okay. I don't think this daily demand zone is going to hold. I don't think this daily demand zone is going to hold. I think we're going to come for this the relative equal high equal lows down here. All right. And I believe that it's just going lower. All right. If we take a sneaky peek at the 15-minute, if I can get my mouse to act right in front of company, all right, you can see once we hit this this order block here on the 4-hour, all right, you can see that it gave us a chalk. All right, we came down low. We have the pullback. We broke that low, and we broke that high. All right, I didn't mark the change of character, but that's exactly what happened. And what do we expect after a change of character? Quite possibly a pullback, because it's an aggressive entry. It's an aggressive thing, the chalk. So we have the, if I can get this thing to work, I'll be all right. We have the break here. So we look for price to come back in this area to see if it's going to come up any higher. All right. But we have enough evidence in front of us. All right. You can see price is already running up into the inefficiency. All right. And into this supply here. So we might see that that change, that shift from this little bullish momentum to bearish momentum here after we fill in some more of that efficiency. So I'm looking for further declines in this market. Now, for those that stood and just stayed with me the whole video, first of all, pat you on the back. And you know, I really appreciate you doing that. But in recognition of that, let's take a look at two other areas, two other markets that I think may be setting up for some high probability trading. Look at the strength meter as of Friday. Here's pound, here's euro, here's NZD at the end. I like to put the extremes. Why this thing keeps doing that? I like to put the extremes against each other. All right, the weakest against the strongest. All right, I'm looking to go long in it with euro pound versus Aussie New Zealand. You understand what I mean? So, you know, doesn't always work out like that, but for the most part it does. And so I'm looking at Aussie New Zealand. If we go to the 4-hour, what am I looking at? Oh gosh. All right, what am I looking at? Actually, let's go higher. Let's go to the daily. All right, we are in supply. Price moved very aggressively to get to that supply. You say how price does? This is how fractal the markets are. Pull back down. We broke that low. We broke this high. We came back. You see this pullback here? We came back into the movement. Came back below that the break of that high, and then shot up. That's the way it works on every time frame, folks. Anyway, we come up into this supply here, a higher time frame supply after this aggressive move up. Okay, and we took out, you see that X, we took out that high. We took out that high. Let's see if we can see it clearly here. We took out the liquidity of this high, of this supply. We closed above the supply. That's why it's not, I don't have it I don't have it stretched out over here because we broke it over here. Okay. So we're in this supply now. Let's see if I can get this just a little darker so you can see it. All right. So what am I expecting here? This is a possible place because I look at things like this. You see how bearish, right? That bearish engulfer there. And then price comes up and tests it and then creates another bearish engulfer. You know, there's a lot of supply up here. All right. I don't think price is just going to shoot and break right through it. So this is a place where I'd be looking for a price to transition, potentially, right? So what we want to take a look at is the price action. Doggone it. We want to look at that price action to see, do we see price transitioning? All right. We see price break the high here. All right. Pull back and we have a break of structure to the downside. All right. Price then comes back up, breaks the high here. All right. Here, this is where things get interesting, right? We'll take that liquidity from this point. All right. Come back and it takes that liquidity there. And then from that point, price comes down. We did not make a new high, right? So what does that mean? That high did not break that low. Didn't make a new low. It becomes weak. It becomes a liquidity target. And we have now relative equal highs here. That price is definitely probably going to come back and get, definitely probably. You hear what I said? All right. So this low becomes weak. This low becomes a liquidity target. This one, because it broke these highs here, right here, it's stronger. It becomes tradable, right? How do we know? Because we were able to trade it. We were able to trade this order block a couple of times. Let's stand another test. We'll see, but to this point, it has demonstrated strength. All right. This high it made, though, the high didn't make a new low. So I'm definitely suspect of that one. So while we're up here, we have this bullish push into this supply. All right. And on the lower time frames, let's go to the 1 hour. On the lower time frames, we can see that we got some good height on this, and we made some what do you call it, patterns that will let us know that we have demand chaining. We have a chain of demand. All right. This demand became another demand that comes down, gets tested. We have another demand here, and here's price now at a 30-minute demand. Let's take a good look at that 30-minute demand so you understand what I'm looking at. All right. See how bullish and go for there? That's a demand zone. All right. Now I don't like taking buys into supply. This is a higher time frame supply up there. I don't know where the end of it is. We're looking at the 30-minute, but we have high, low, high, low, high. We haven't broken that high yet. All right. This is microstructure because this is the top of that range. All right. We haven't broken that high or that low. See? So we're within that range. I'm waiting for a break of it, for the breakout, either this way or this way. All right. I would like to see if price is going up, we raid that high, raid the relative equal highs up here, and then come down and take out these lows, and continue down. I think the pound may be weak versus the New Zealand dollar. Look at the fundamentals and you see that planned rate hikes and whatnot. And even though the RBA, not the RBA, whoever, for Aussie as well, but I'm not going to go into the news. Anyway, I'm thinking that New Zealand is going to be, I think that we're going to, I'm getting my news mixed up. I'm sorry. I think you have good reason to believe that price will continue higher. And I can't believe I just messed up this whole thing. Price is going to continue. I believe price is going to continue higher. I think we're going to take these highs out. I think this chaining of demand will lead to a higher price taking those highs out. I believe that pound will be stronger against the New Zealand dollar, which is at the weakest of the on the strength meters. Okay. Don't let my mixed up cookie brain mess you up. I got an arrow going down. That's not. We're going to stay flexible here. All right. But I believe it's going to go up. I believe the pound is stronger than the New Zealand dollar. And although we have a weak low here, that low, I'm recognizing high, low, high, low, high. It's doing its thing. When I start, if I see a break of these lows, these swing lows, when I start to see a break, that's when I'll think, all right, we're going bearish. All right, but right now, as it stands, I believe we're going to continue bullish. Let's go to the next one. If I can just get through this without stumbling and stammering. All right, let's go to Euro New Zealand dollar. This is one of the stronger against one of the weakest. All right, and I basically have a very similar situation where we've come up into this supply zone. All right, and this is a higher time frame supply. All right, and you see how aggressive price has come up into there, even with inefficiencies, right? The inefficient price movement. On the 4 hour, if I can just move this over. All right. I want you to also recognize something before I go there. All right. Price came up and took this high, took the high of this supply. This supply actually stretches down like that, but I refined it. All right. The lower time frame. But we also have another high to get right here. Okay. And then a small inefficiency here, and then this higher time frame supply zone. All right, so let's go down to 4. You can see price formed a bearish engulfer here. This is the 4 hour. It closed bearishly, right? It just engulfed the body, right? It just engulfed the body. That's it. But we want to see what that looks like close up, and I'm going to take you to the 15-minute. All right, what are we looking for? We're looking for signs that price may be shifting from bearish to bullish or bullish to bearish. Okay. What you want to see is that high, a swing low, a higher high, a swing back, another swing low. Then we make the higher high. This is where it starts to matter, because you break. Come on, man. I swear. You break this, right? You break that high. So now you're looking for that swing low to be broken. If that swing low, which would constitute a break of structure, if it breaks that low, amen, this thing is going to continue down. We have imbalances all the way down to 1.7185, 7185, right? So we can take that low at least down to there, because we're going to fill in that this inefficient price movement, this higher time frame imbalance. All right. we already missed the chalk, the change of character. That's already done. All right. How do you see that? Look at it on the 10-minute. It becomes a little clearer. All right. You see the price broke this high. This is the highest point of the of this peak here. All right. But before it got there, we made that high. All right. Price came down and broke that high, took the liquidity and swung all the way down low. All right. We swung, this is the swing low. All right. Price breaks that high here, makes the highest peak. So we're looking at the swing low to be broken for a change of character to give us an indication that price is changing from bullish to bearish momentum. It does so here. It pulls back into that supply that's here. All right, because this is the way price moves. This is the way it moves. And you could have took your short here. Again, chalk is aggressive, but you could have took that move and it moved like 50 pips already. All right. So what are we doing now? What are we doing now? Price made this low, broke this high. All right, we come back up. If price what we're looking for is a break of structure. That'll confirm the bearish momentum. If price breaks that structure here, you know that we can expect price to come on down. All right. That's it. Look for updates. All right. And I want you to start checking the community tab at my channel. All right. Check the community tab because I'm going to start leaving messages and I might leave some updates in there. Guys, make sure you smash that like button. Help the YouTube algorithm out so that my channel can grow. All right. You want to subscribe. All right. If you like the way I get down, if you like the way I stutter and stammer through some of my explanations, but at the very end, I get it, right? I get to it. But anyway, share the wealth, man. Share if you are looking for other pairs to be analyzed, make sure you leave a comment so that I could look at it for you. All right. I appreciate your support. Thank you. I love my subscribers and I want to make sure that I keep putting out good information for you. Again, make sure you're looking at that, checking out the community tab where I can leave messages and communicate with you. Okay. Sometimes I'm going to leave some updates and I don't want you to miss any. I will see you in the next video. Safe trading next week and have a great weekend.